Assalamu alaikum. Good evening, everyone. In ACFE Oman webinar session number 4 for the year 2021. Today's webinar session topic is VAT frauds. Billions of dollars are lost every year to value-added tax fraud, which is negatively affecting the nations worldwide. This is Hassan Ahmed, the organizer, and today we have joined by our president, Mr. Jose Chaku, our past president, Mr. Davis Kalukaran, vice president, Mr. Khalil Nafhan Al-Rawahi, our treasurer, Mr. Kevin Frank D'Souza, director training, Ms. Fathia Al-Maskari, director membership, Mr. Salim Al-Mushafri, and the director, Murad Mahmoud Al-Bulashi. Thank you very much, everyone, for attending today's session. And today, now I would request our president, Mr. Jose Chaku, for the welcome address. Over to you, Mr. Jose Chaku.
Thank you, Hassan. Good evening and assalamu alaikum to all. Welcome all to our fourth CP session of 2021. For the benefit of those who are not members of ACFE, let me brief about ACFE. The ACFE is the world's largest anti-fraud organization incorporated in the United States. The association is the premier provider of anti-fraud training and education. Together with more than 85,000 members, the ACFE is reducing business fraud worldwide and inspiring public confidence in the integrity and objectivity within the profession. The Oman chapter of ACFE was established in 2015 under the sponsorship of the College of Banking and Financial Studies, popularly known as CBFS. Today, we have over 500 attendees we are expecting, and from 36 countries. ACFE Oman is very happy to present this successful webinar for the benefit of professional community around the world. Today, our speaker is Mr. Salim Al-Mushrafi, who is presently serving ACFE Oman board as director membership. Today, around 500 people are watching this session, and it is one of the most demanded topic of the day. To introduce the speaker, I kindly request Mr. Khalil Al-Rawahi, who is the Vice President of ACFE Oman. Khalil.
Thank you, sir. Thank you all for attending the webinar. Our speaker today, Mr. Salim Al-Mushafri. He is an experienced and skilled banker who had substantial experience of over 17 years in fighting financial crime in the banking sector. Over the years, he worked in a number of banks in Oman and currently holds the position of the head of anti-fraud unit in Bank Dhofar. He is also a board member and membership director in ACFE Oman. Mr. Salim holds 7 academic and professional qualifications, including Certified Fraud Examiner, CFE, Master in Business Administration, International Diploma in Financial Crime Prevention. He is also certified in financial crime and certified compliance professional. So please welcome Mr. Salim. Please, Mr. Salim, you can start the session. Thank you.
Okay, so thank you, Khalil, for the lovely introduction. And thank you, ladies and gentlemen, for attending this webinar. tens of billions of US dollars are lost every year to value-added tax fraud, negatively affecting economies worldwide. And so in today's webinar, we'll learn about different types of VAT fraud and how they work, why you should be worried about them, and the negative impact they have in the economies. So without further ado, let's get started. The agenda of this webinar is going to be as follows. We'll take a general introduction about VAT, the definition of VAT, and VAT gap. After that, we'll explain the basic concept of VAT, and after that, we'll take a look at the VAT rates defined on the GCC. Then we'll talk about our main topic, which is types of VAT fraud. In particular, we'll be concentrating on the most damaging type, which is MTIC carousel fraud. After that, we'll see the impact of VAT fraud in the economy and how fraudsters are misusing banking channels in order to facilitate the VAT fraud. Then we'll see how tax authorities are responding to VAT fraud and how companies can protect themselves from the consequences. Finally, take a look at some of the technology proposals to fight VAT fraud. So, on 16th April 2021, Oman became the fourth member state of the Gulf Cooperation Council, the GCC, to implement VAT, following the United Arab Emirates, the Kingdom of Saudi Arabia, and Kingdom of Bahrain. More than 166 countries worldwide have opted to implement VAT in order to diversify their sources of income. On average, VAT raises revenue to nearly 27% of total tax revenue and over 5% of the GDP. France, for example, levies more than 200 million euros with VAT taxes. That is 2 times what French citizens pay in income tax. Likewise, the introduction of VAT will have a positive impact on Oman economy. First, it will generate additional revenue, and also it will help overcome the state debt obligation. Before diving deep into VAT fraud, let's first define VAT. VAT, or VAT, or the value-added tax, is defined as the indirect tax on consumption charged on the supply of taxable goods and services. It is levied on transactions rather than directly on income or profit. It is also levied on the importations of goods and services. So tax authorities estimate every year how much revenue VAT will generate. For example, it was estimated that Oman will generate 400 million Omani Riyal during this year from VAT tax. However, the situation at the end of the year might be different, so the figure might be a little bit lower than that, say for 100 million. The difference between the expected and the actual is known as the VAT gap. This gap could be a result of many factors, including VAT fraud, bankruptcies, financial insolvencies, miscalculations, and inadequate VAT collection systems. Let's take some statistics. So the total amount of the European Union's VAT gap in 2018 was estimated at 140 billion euro. The situation was even worse in 2020, with an estimated loss of 160 billion euros, mainly due to COVID-19 pandemic. Out of that total, 40 to 60 billions were attributed to VAT fraud, CAROUSEL VAT fraud in particular. It was also observed that 2% of the organized crime groups, OCGs, were behind 80% of the VAT fraud. In order to understand that, we need first to understand the basic concept of VAT itself. So let's explain it here. First of all, the VAT rule states that a business that buys and sells goods and services should charge VAT to its customers. This VAT is known as output VAT because it's charged on the output of the company, on the products and services that go in out of the company. Also, the VAT rule says that a business is charged VAT by its suppliers, and this VAT is known as input VAT because it is charged on the input of the company. that is on the products and services that come into the company. Finally, the VAT rule states that a business can reclaim the VAT from tax authority, so therefore it should be only the net VAT, which equal to output VAT minus input VAT. In this way, a business acts as a tax collector on behalf of the government. So let's explain it here with an example. Here we have a supply chain in a VAT-free economy. This means no VAT required by the government to be collected. So in this supply chain, we have a producer, a manufacturer, a distributor, a retailer, and a consumer. For simplicity, we are assuming that each party in this supply chain are going to charge 20% profit margin. So it happens there that the producer will calculate its profit margin of 20% and sell its product at 1,000 to the manufacturer, and so the manufacturer will sell its product at 1,200 to the distributor, and so on and so forth, until the retailer sells its product to the final consumer at 1,728. With that, this simplified supply chain is over. Now, let us introduce a VAT rate of 5%. Now, in this case, a new party will come into the picture, and that's the tax authority. As you can notice here, the sale prices are the same as we saw before. However, now each party has to calculate a VAT of 5% and add it to its invoice. For example, the producer now has to calculate 5% on its sale price, which will result in 50 VAT amount. That amount will be added to the invoice, and then this total amount of 1,050 will be paid by the manufacturer. Likewise, for the rest of the parties, the manufacturer will calculate 60 VAT and charge it to the distributor. The distributor will charge 72 VAT amount to the retailer, and finally the retailer will calculate a 5% VAT on its sale price of 1,728. The result will be 86 VAT amount. That amount will be added to the total invoice to be paid by the final consumer. Now, it's important here to notice that this is the actual amount, 86, that will be paid as a net VAT to the government, and it's actually paid by the final consumer. Now, let's see how this 86 is actually paid to the government. Just remember the VAT rule, which said that each supplier has to pay only the net VAT, which equal to output VAT minus input VAT. So in this example, we have the producer who collected 50 output VAT and paid 0 input VAT. So the net is 50 minus 0, which equals 50. Likewise, for the rest of the parties, the manufacturer has collected 6 and paid 50. So the net is 10. And so on and so forth. The distributor has a net of 12, and the retailer has a net of 14. So the total net payable tax to the tax authority is 50 plus 10 plus 12 plus 40, which equal to 86. Now let us take a look at some of VAT rates defined in the GCC. The GCC VAT framework has agreed on 3 VAT rates. The first 2 are taxable supplies, while the third is tax exempt. So we have a standard rate at 5%, a 0 rate at 0%, and tax exempt, which no taxes charged. It's worth to notice here that on 2020, Saudi Arabia has tripled its standard rate from 5% to 15%. Now, the difference between these rates is confusing, especially between 0 rate and exempt, tax exempt. But we need to understand the difference between them in order to understand the VAT fraud itself. So for tax exempt supplies, no output VAT is required to be collected by the supplier. However, any input VAT that's been paid previously is not available for the supplier to be credited to him. So let's explain with an example. Suppose we are a business that selling 3 products, finished product. We have product A, product B, and product C. Product A is charged a VAT at standard rate of 5. Product B is at 0, and product C is exempted from VAT. Now, in order to produce our final products, we need our raw materials, and these raw materials are inputs. So these inputs are charged at VAT of 5% by our suppliers, meaning we have to pay our input VAT to the suppliers. Assuming that we have purchased the same quantity of raw materials worth of 100,000 each for the product A, B, and C, then our suppliers charge us 5% on each. So we have now to pay to the supplier 105. Then we calculated our sales price, which equal to 120. Until here, you can see there is no difference at all in the three scenarios. Now let's calculate the output VAT that we have to charge to our customers. So for product A, we calculate 5% on the 120, which will equal 6,000. That is the total amount that we have to collect as output VAT from our customers. For product B, it is 0 multiplied by 120, which will equal to 0. And for the tax exempted product C, we are not allowed to collect any output VAT. So it's by default 0. So when we come to calculate the net VAT, we note that for product A, it is 0 output VAT. It's 6 output VAT that we collected minus the input VAT that we paid, which is 6 minus 5 equal 1. For product B, it is 0 output VAT minus 5 input VAT. So here it is minus 5. This means this amount of 5,000 is claimable by us. We can claim it from the tax authority, and the tax authority have the obligation to pay this back to us. And for the tax exempt, even though we have paid input VAT of 5, it is not available for us to credit. So the net is 0, which means that this 5,000 is lost by us. Now let's talk about the topic, which is the types of VAT fraud. VAT fraud can be grouped into 3 categories. Category 1, where partial VAT only is paid to the tax authority. The other part is pocketed by the fraudsters and is not paid to the tax authority. Category 2 is where no VAT at all is paid to the tax authority. And category 3 is where the VAT is actually be refunded by the government despite no payment of VAT at an earlier stage. Here are the types of VAT frauds that we are going to talk about today. We have non-registration for VAT, undervalued imports, underreporting of sales, inflated refund claims, domestic sales disguised as export, fictitious traders, deliberate insolvency, smuggling of goods, labor provider fraud, and the most damaging to the economy, MTIC, which can be subdivided into 3 sub-items: acquisition fraud, carousel fraud, and contra-trading fraud. So let's talk about each one of them. For registration for VAT, is basically a company that is not registered for VAT will invent a VAT number registration, a VAT registration number, and will add it to its invoices. And so it will sell the products to its customers and will collect output VAT from them. But instead of passing that money to the government, it will be pocketed by the supplier. Next up is undervalued invoice of imports. This is mostly common in e-commerce companies who import goods like electronics. So what happens here, those companies will declare a value for those imported goods so that it is far lower than the actual price. And with that, they will end up paying lesser import custom duties and lesser import VAT. The next one is underreporting of sales. So what happens here is the companies will make sales of their products to their customers, but they will fail to collect output VAT from them. Or maybe they will collect a VAT amount much lesser than what they should have collected. So in this way, they will end up depriving the government from tax revenue, and also they will be creating unlawful competition environment since they are offering a price much lesser than their competitions, who are charging the full amount of VAT. Next up is inflated refund claims. What happens here is that companies will acquire invoices for purchases they have never made. And for that, since they made the purchases, they will claim that they paid input VAT. So for the input VAT, it's refundable. So they will go on to the tax authority and claim a refund for those input VAT. Or at least they will reduce the amount of VAT payable to the tax authority. Next up is a domestic disguised as export. First of all, we need to understand that exports are zero rated, meaning exporter is not required to collect output VAT from its customers. So what happens here, a company will go and sell its goods and services in the local market and will collect output VAT from its customers. Then they will go and claim that they have paid or they have sold those goods to an overseas company. They will produce fake export invoices and documentation, and the real invoices are concealed and not entered into accounting records. So only VAT inclusive amounts are entered as zero rated exports. With that, they will end up doing that. They will fail to pass the output VAT to the tax authority. They will also reclaim the input VAT from the tax authority. Next up is futures traders. So what happens here is that legitimate companies will create a fake copies of themselves and will register themselves for VAT. So they will make fake purchases and sales in order to defraud the authorities by registering non-existent business transactions. And with that, they'll go and claim refunds from the companies, so from the tax authority. So what happens is that they will make fake purchases and they will claim that they have paid input VAT, and then for their sales they will say that they have exported those sales to the overseas company. With that, they didn't collect any output VAT, and so they will end up with a net claimable VAT from the tax authority. Next up is deliberate insolvency. So companies will go and purchase taxable goods and sell them in the increased values. Then they will collect high amount of output VAT. Then they will go and declare themselves as insolvent. Since they are limited companies, they are allowed to not pay their debts, including VAT liabilities in arrear. Next up is the goods smuggling. So what happens here is that businesses smuggle goods into the local market, and by doing so, they fail to pay import custom duties and input VAT on the smuggled goods. Then they will go and sell their products in the shadow economy and will collect output VAT from their customers, but they will fail to pass that output VAT to the tax authority. Next one is the labor provider fraud. A labor provider fraud involves the fraudulent evasions of VAT by a missing trader. So labor providers known as gun masters are usually present in industries such as construction, security, cleaning, agriculture, transportation, and food. So what happens in type of fraud is that a customer will request a provision or will contract with the contractor in order to supply him a labor supply, a labor provision. And the main contractor will subcontract that provision of labor to a subcontractor. And then the subcontractor will supply the labor provision to the final consumer. Then the final consumer will pay the invoice to the contractor, including the VAT, and the main contractor will pay its due to the subcontractors, including the VAT. However, the subcontractor will fail to pay the VAT to the tax authority and will disappear. Usually, the subcontractor or the missing trader use a fake VAT registration number. Now we come up to the most elegant type of fraud, which is MTIC. MTIC stands for Missing Trader Intra-Community. So when we talk about community, we are referring to the GCC as one community. So intra-community transactions basically are transactions happening in the GCC itself between the member states of the GCC. And so the intra-community transactions are zero rated, meaning the exporter of the product is not required to collect output VAT. So this MTIC fraud actually abuses the VAT rules for cross-border transactions, and it is most popular among the fraudsters. And it's of course the most damaging type to the economy. In the in the sector of carbon emission credits, for example, an investment of 100 million euro could be multiplied through CAROUSEL fraud into 600 million within just a few hours. So there are three types of MTIC fraud, namely acquisition fraud, CAROUSEL fraud, and contra-trading fraud. So let's talk about each one of them. First one is the acquisition fraud. So in the acquisition fraud, what happens is that we have two companies, we have two countries, Oman in this example and another GCC country. What happens is that a company in Oman, let's call it company B, will import goods from company A. And since this is a cross-border intra-community transactions, company A is not required to collect output VAT from company B. So let's assume that the total amount of import is 90 million. And so now when company B receives the products, it makes a sale of that product to company C. However, since this is a local transaction, company B is required by law to collect that from company C. So what happens that the company B will collect that amount of, let's say, 5 million from company C, and however, company B will fail to pass that amount to the tax authority and will go missing. They will disappear. That's why it will be called a trader missing trader, and hence the name of this type of fraud, MTIC, missing trader intra-community. So the total loss to the economy based on this transaction is 5 million, which should have been paid to the tax authority, but it was not paid. Now, usually this type of fraud, the acquisition fraud is not part of the organized crime groups. The only crime is the missing trader, and he took the amount and run away. So if the cycle stops here, this type of fraud, as you said, that is called acquisition fraud. However, if the cycle continues, it is called CAROUSEL fraud. And as you are aware, the amusement ride share is known as the carousel, and it goes around and around over and over again until it stops. So let's see why this type of fraud is called carousel. So what happens in the carousel fraud is that company B will sell, company C will sell its product to the next company in line, and the next company will sell to the next, and so on and so forth. These companies in the middle are known as a buffer. Their existence here is to make detection of this fraud very difficult. And by the way, these companies might be an innocent company or might be part of the gang, part of the organized crime group. So once the product reaches the last company in the buffer, this company will sell its product to a broker, and that broker will export its product back to company A or any other company. So what happens, since this transaction between company D and company A is cross-border intra-community transaction, it is zero rated, meaning broker company D is not required to collect any output VAT from A. However, he has the right to collect all the input VAT it paid to the last company here. So the broker company D will go on and claim the VAT from the tax authority, and with that, this VAT claim will include the 5 million that was not paid in the first place by the innocent trader. So now the total losses to the economy will increase by 5 million and it can become 10 million. Now it's carousel, so the cycle is not yet stopped. Once the broker exports the product to company A will again export to company B, or if the company B is still there, or if the company B is already gone missing, they export to another company, and the cycle starts over again and again and again. So for the first round, the losses is 10 million, second round will be 20, third round will be 30, and so on and so forth, until they get enough of the VAT, and then they will disappear. Now let's talk about the contra-trading fraud. A contra-trading fraud is an advanced type of carousel fraud. So in acquisition fraud and carousel fraud, tax authority first became aware of the fraud when the broker submits his claim for refund. However, in the contra-trading, there is no from the broker. The broker will not claim a refund from the tax authority. Instead, he will create a new supply chain and will offset the amount of claimable VAT with the output VAT that he will collect. Meaning, now what the broker will do is will go and export and import products from another company, let's say company C, and then since again this is a cross-border transactions, it is zero rated, so he will not go, he's not required to collect any output VAT, and then he will go sell his product to a broker, another broker, and this broker he will collect an output VAT. Let's say the output VAT he collected from broker 2 or broker F is 5 million. So now 5 million, and since it's VAT, he has supposed to pay tax authority. But since he has a claimable out of 5 million from the tax authority, and then he received now 5 million from the broker, he will offset the amount. So the net payable or receivable VAT for him will be 0. And then broker D will go and export the product to another company, and again in another country. So it happens that since this transaction from F to G is cross-border, broker company is not required to collect any output VAT. However, he has the right to claim the input VAT he paid to company D. So he will claim the VAT from authority, and this VAT that he will claim will include the missing trader's VAT that was not paid. So the actual losses will be the same, whether it is carousel or contra-trading. However, in the contra-trading fraud, it is very difficult to be detected, because now it's very difficult to link this amount to a missing trader VAT fraud. The missing trader VAT was not paid. Now let's see the impact of VAT fraud in the economy. So by depriving the GCC member states of the tax revenue, the criminals are actually robbing the citizens from the means of their governments to fund infrastructural projects such as schools, hospitals, as well as vital public services. Also, fraudsters often use the proceeds of the funds for other forms of criminality such as smuggling, drug trafficking, money laundering, and financing terrorism. Also, since the missing trader, for example, in the carousel, for the missing trader is missing, so when there are some losses, what happens is that the tax authority will try to recover those losses by denying input tax recovery from innocent businesses. As we mentioned before in the carousel fraud, those companies participating in the carousel fraud might be part of the organized crime group or might be innocent. But since the fraudsters are already gone and the tax authority cannot follow them, the only companies that they can capture are the innocent companies, so they will deny them any input VAT recovery. In addition to that, the VAT fraud actually creates unlawful competitive advantage to the fraudsters, which encourages customers to buy from the fraudsters since they are charging lesser amount as compared to their competitors. Now, this is how criminals are using banking channels in order to facilitate VAT fraud. Banks are used as platform to make third-party payments, and work in X-code principle. This means that money is uploaded and transferred immediately through the client accounts on the same day. For example, when UK officials were tracing VAT fraudulent amounts, they found out that the biggest platform was an offshore bank called FCIP, which was closed by the Netherlands authorities in 2006. Authorities cannot trace the money until they inspect the books, but the missing traders have already gone and they cannot trace where the money was routed. Also, with the development of internet payment platform, the huge amount of money could now easily be transferred. These platforms quickly become the fraudsters' favorite method for moving funds, because they do not operate within the normal channels and are not exposed to traditional banking surveillance. Now let's see how tax authorities are responding to tax fraud. Some tax authorities have employed some of the measures to fight the VAT fraud, including one measure is in denial of input VAT, as we mentioned before. So if a trader can lose his right to reclaim input VAT when it is certain that the trader knew or should have known by his purchase he was participating in a transaction connected with fraudulent evasion of VAT. Another measure includes a reverse charge mechanism. So as per the normal VAT rule, a VAT due on supply is normally accounted for and collected by the supplier. However, under the reverse charge mechanism, the customer rather than the supplier is required to account for VAT. Another measure is the joint and several liability for unpaid VAT. So any business in the supply chain of goods which have been object of MTIC fraud can be held liable to pay the unaccounted VAT if the relevant person knew or had reasonable ground to suspect that the VAT on the supply or any previous or subsequent supply has been unpaid. Now let's see how companies can protect us from the consequences of VAT fraud. So if companies do not exercise due care initially, the tax authority might demonstrate that the company knew or should have known that the trading was linked to a fraudulent tax losses. And because of that, the tax authority will deny any input recovery to those companies. That's why businesses need to carry out due diligence on their supply chains and customers. Now let's take a look at some of the technological proposal to combat VAT fraud. So the only way to efficiently prevent MTIC fraud, for example, within the member state is by making system obligatory for all companies. But making system obligatory for all companies is a challenge actually. That's why most of these technologies were not implemented. So since 2007, the following three So since 2007, the following three different technology-intensive MTIC frauds prevention solutions have been proposed. We have VAT Locator Number, VLN, Real-Time VAT, RTvat, and Certified Tax Software, D-VAT. So let's explain each one of them. So VAT Locator Number, VLN, what happens here that when company A in the GCC country wants to export products to company B in Oman, first they have to request a VLN number from the tax authority in their country through the system, of course, through a centralized system. So once the tax authority receive the request from their company A, they will do their risk assessment on the company, and if they determine that this company is low risk, they will issue them a VLN number. This VLN number for this example is known as VLN number 1. So company A now will have to include that VLN number in its invoices and export documents and send it to the company B. Company B now will receive the products and the export documents. So in order for company B to sell its products to company C, they again have to request a VLN number from their tax authority in Oman. So the request will go to the tax authority, and tax authority of Oman will do their risk assessment on the company. And so if they determine that this company B is low risk, they will issue VLN number 2. This VLN number 2, company B has to include it in its invoice and then put it in the invoice and send it to company C. Now, upon receiving the invoice from company C has now the obligation to verify that VLN number 2 is valid. So if company C failed to verify the VLN number validity, and later on it was found that VLN number is invalid, the company C has the risk of losing the input that claims from the tax authority. So once company C validates that the VLN number 2 is valid, it will make the payment to company B, including the VAT amount. And with this, the carousel fraud will be eliminated because no payment will be paid to invalid VLN number. In case company C, for example, found out that the VLN number 2 is not valid, they still can't pay to the company B, but they have to pay only the invoice amount without VAT, and the VAT amount has to be paid directly to the tax authority through the system. So the system will allow this kind of payment and will issue 2 receipt, one for company B and one for company C. The next one is real-time VAT, RTvat. This system actually used to secure the amount of VAT by blocking it and sending it directly to the tax authority. So what happens that when the manufacturer makes payment to produce through the bank account, what happens is that the system will block the VAT the VAT amount immediately and directly transfer it from the producer's bank account to the tax authority. Likewise for the rest of the supply chains. So the remaining amount available for the producer will be only the 1,000 sale price without the VAT. The remaining amount for the manufacturer will be only 1,200 without the VAT amount. Now, when it comes to the retailer will make it sale to the final consumer. The final consumer has to pay by a credit card or any plastic money. Once the consumer pays to the retailer, again the system will block the amount of the VAT and will directly transfer it to the tax authority. Now remember from the VAT rule that each supplier has the right to claim the input VAT that it paid. For example here, since the manufacturer has paid the 50 VAT amount to the producer, now the manufacturer has the right to claim this 50 from the tax authority. So the system will do that automatically on the same day. So the system will transfer immediately the VAT amount to the manufacturer on the same day, 60 to the distributor on the same day, and so on and so forth. The only remaining amount will be the 6, which will be kept by the tax authority. And again, with that, the carousel VAT will be eliminated. The carousel fraud will be eliminated, since the amount of VAT is only collected by the tax authority themselves. Now, for both of the two technologies, I'm not aware of any country that is actually implementing those systems because, as I told you, it's very technology intensive. Now let's talk about this one, the certified tax software. In the certified tax software, the system secures the VAT remission via certified tax software and trusted third party. So what happens is that the third parties are service provider which stand between the tax authority and the companies. So the third party had the obligation to remit the VAT dues by their clients, the companies, to the tax authority. Also, they have the obligation to file the VAT returns for their clients, and also they have the obligation to guarantee that the payments on the tax due and the accuracy of refund, the accuracy of the returns. As far to the best of my knowledge, there is one country that implemented the system, which is an East African country of Rwanda. They implemented the system, or a similar system, say electronic billing machine. It was implemented in 2012, and the system is now active. Now, this brings me to the end of this presentation. And if you have any questions, you are most welcome to ask.
Thank you so much, Mr. Salim. We have few questions.
Yes.
The first question is from Mr. Ammar Al-Mawali. A VAT amount 5% will pay only by the consumer, I mean last customer, if I'm not wrong.
Come again?
The question is, VAT amount 5% will pay only by the customer and consumer, if I'm not wrong. This is a question from Mr. Ammar Al-Mawali.
See, as we explained before, what happens is that the actual net payable VAT is paid by the final consumer. But as a system, each supplier has to pay input VAT and then collect output VAT. And so they have to calculate the net VAT payable to the government. So they will subtract what's going on. They will subtract. So the net payable. So the net payable VAT to the government will be equal to output VAT minus input VAT. So when you calculate it, actually the supplier has not paid anything. He only collected the amount from his customers and paid to his suppliers, and the net is paid to the tax authority.
Thank you so much, sir. The next question is from Mr. Ahmad Al-Hadasi. How does the government deal with negative 5% net wealth?
Yeah, so basically, as I told you, as per the VAT rule, the supplier has the right to claim the input VAT because the supplier is not supposed to pay the VAT. The actual person who has supposed to pay the VAT is the final consumer. So the supplier, if he collected zero VAT from his customers, but he paid already input VAT, or let's say 5,000, then 5,000 amount is collectable by the customer, by the supplier, because he's not supposed. He's only he's acting as a tax collector for the government. That's why.
Okay, sir. Thank you. The next question is from Mr. Harshit. If a case where a company has done window dressing of financials by showing a positive picture, what type of VAT implications or VAT fraud scenario can be possible?
Sorry, I didn't get that question.
The question is, if a case where a company has done window dressing of financials by showing a positive picture, what type of VAT implications or VAT fraud scenario can be possible?
Can he explain the question more, because I didn't understand it actually?
Is a case, for example, a company has done window dressing in their financial statements just to show their financials healthy, right?
Yeah.
So what type of fraud scenario can be possible?
Actually, they can, for example, assume, they can say, for example, they might under-report their sales. In that case, they will pay lesser net VAT to the government. They might also overstate their purchases, and with that, they will claim higher input VAT from the government. So yeah, that's part of the fraud that can happen.
Okay, sir. Thank you so much. The next question is from Mr. Ahmed Al-Harasi. Can you give an example of MTIC?
MTIC? I already gave an example.
Okay. Okay. The next question is VAT fraud addressed by BEPS project adopted by OECD? Also, what kind of tax code Oman adopt to prevent such activities?
I don't. Can you repeat, please?
Is VAT fraud addressed by BEPS projects adopted by OECD? Also, what kind of tax code Oman adopt to prevent such activities?
The only measure that I know that the government, because this is just recently introduced, only 1 month, the only measure I know of is that they have created a website where you can verify that the VAT registration number is valid. This, to the best of my knowledge.
Okay. The next question is from Mr. Majid. Can you please elaborate RCVAT mechanism as tax authorities' response to combat VAT fraud?
Come again? So I cannot hear you properly.
Okay. Can you please elaborate RCVAT mechanism as a tax authorities' response to combat VAT fraud?
RTvat?
Yeah. This he has taken from your slides.
Which one? Is it? Can I share it again? Because I want to know where is exactly.
Okay.
He's talking about.
Okay. So the other question we'll take, like if an auditor come across with any VAT fraud in his organization, does he require to report to the tax authority in addition to the board?
Well, they are supposed to report to the board first, but if finally the decision was taken not to report it to the authority, then he would be part of the crime. So eventually, as like what they say, whistleblower, he has to report to the authorities, because if you hide, then you'll be part of the crime group.
Okay, so the next question is from Mr. Muhammad Mazaruddin. Please explain reverse tax mechanism.
Okay, so reverse tax mechanism is, as I mentioned, that instead of the supplier is collecting the VAT, the customer himself is supposed to collect the VAT. For example, here in Oman, we have in the law, if you are importing goods from outside, you are required to pay input VAT. But how will you pay input VAT to a company which is outside the country? So that's why they have introduced a reverse charge VAT, where the importer, the company here in Oman, supposed to account for the VAT and register it with itself. But again, when the importer, start selling its product to the customer, he have to collect the output VAT. So actually, the reverse charge would have a zero effect for the importer. Likewise, why for example, this reverse charge is introduced in UK? Why it was introduced? Because usually when the supplier collects the VAT, he will take the money and run away. But under the reverse VAT charge, what will happen? The customer will be accountable for the VAT. So even if the supplier run away, still the government can capture capture the customer and let him pay the input VAT.
Okay, so
So basically, it's the same. Like you are paying, instead of paying the input VAT to your supplier, you have to account it for it with you and keep it with you.
Okay, so the next question is from Mr. Imad Al Awani. What is the role of internal auditor to detect any VAT fraud?
Well, their role is like it is the same responsibility that they have to detect any kind of fraud, whether it's VAT or not. So if there is a VAT or not VAT, whatever fraud, they have the responsibility to detect it. However, under the audit principles, the auditors only select samples, so they don't have the responsibility actually to detect it. What they have to do, their due diligence in case, like when selecting the samples and so on and so forth, to make sure that they are detecting the fraud. However, if a fraud occurred and they did not detect it, they do not have the responsibility to. They will not be accountable for that fraud because they have done their due diligence, they have done their process properly.
Thank you so much. Sir, there are a few more questions, but we'll take the last question. The question is from Mr. Abdul Rahman Al Kulaybi. Can VAT fraud affect the FDI and export movement? Can VAT fraud affect the FDI, foreign direct investment, and export movements?
I think it does. It does. It does. It can.
Okay, thank you so much, sir. So there are a few more questions. We will take the question and we will reply through email. So this is because of the shortage of time. Now I will request our past president, Mr. Davis Kalukuran, for the formal vote of thanks. Over to you, Mr. Davis.
Thank you, Hassan. It has been a great informative session for all of us. And Salim, you have given an excellent demonstration of how the fraud can be committed through VAT procedures. And sometime I just thought that we are an anti-fraud organization, but the way in which the questions were going, I thought it's a fraud training association. So we have to be looking after the fraudsters to act against any fraud which is happening. Your session was very informative, and it has given us very good thoughts where we should be more careful, especially auditors and people in the accounting profession and people who are charged with the administration and implementation of VAT in their organization. They have to be very careful about these things. And in some points where you mentioned about the in the purchase procurement fraud, and when you purchase something and then without knowing the fraudsters, so all these situations are really frightening, and companies have to be very careful. And I feel that they should always be in liaison with their advisors, consultants, or tax practitioners to see that they detect the frauds on the spot. Otherwise, it will arrive into very serious consequences.
Exactly.
I'm quite happy that we have about more than 250 attendees today, and it was a very informative session. I am sure that Salim may be able to deliver more and more lectures on these topics. For most of the things were not known to me as well. How the fraudsters act on the VAT fraud. Because worldwide, we know that worldwide in the year 2019, the world GDP was around 83 trillion. And the VAT collection on an average worldwide was around 15.5%. So we can say that around 12 trillion collections were through VAT. And as per the statistics published by our ACFE, the 5% of the collection should go as fraud. Okay, so that means we should be having around 1.8 to 2 trillion of VAT fraud loss every year. So 2 trillion is a big amount. Okay, when you compare the economy of Oman and other countries, 2 trillion, it's a big amount. And you can see that, just to understand, India's economy is somewhere between 2 and 3 trillion. So VAT itself will take about 2 trillion, fraud loss means, it's a big amount. So we have to be more careful. So thanks for your excellent presentation. And I hope that, all the participants, attendees enjoy the presentation. As Mr. Hassan put it, if you have any questions further, you can email to all of us. We are all here. And I hope that, you will get a good, you will be getting some feedback forms wherein I hope we will receive your feedbacks. Okay, so thank you very much. And I appreciate our board under the dynamic leadership of Mr. Jose Shako and the other board members for organizing this sort of very informative workshop on VAT fraud. Okay, it is something new. So thank you very much, Salim, and thank you all the participants in this, and thank you very much.
Thank you very much.
Thank you, Mr. Davis. Thank you, Salim.
Thank you.